right. Welcome to episode 289 of the Minding Your Business podcast. Entrepreneurship, real estate, trending news. There is still no business like minding your own. Yes. Thank you so much for joining us today for this other episode. We're recording this April 13th of 2022. Again, hope this finds you well. Hope that you're enjoying this inflationary period in our history. I was at the gas pump yesterday, and of course I'm here in Memphis for those that are aware, and the gas was like $4.30 a gallon. And so I started pumping it, and you're used to, you see the numbers kind of going up, and one number was going really fast and the other number really slow. I'll let you figure out which one was which. See, the dollar amount was going really fast, and the gas going into my car was going very slow. So, go figure. Check me out, champ10k.com. That's where you can connect with me, learn more about me, see different resources that I provide to great folks like yourself. And it's also, you can check out various episodes, or actually all episodes of the Minding Your Business podcast. And so definitely appreciate all of you. I appreciate the feedback and the support that you provide me, as well as those that have been the tremendous guest of this podcast. And this podcast isn't anything without you as listeners and supporters and the great guests that we have on all of our podcast episodes. I'm extremely excited about today's guest who joins us from the Chicago, Illinois area. Just a tremendous, professional. I remember first meeting him on some other platforms and just hearing the kind of the calm professionalism that he has, that he brings to the business. And of course, being in real estate, it can be filled sometimes with a lot of hype, and there's a lot of sales, quote unquote, salespeople that try to hype you up, and they ride around in Ferraris and they show you big checks and things like that. And, Brian O'Neill's our guest today. He's the founder and owner of BKW Property Solutions and A Better Way to Real Estate podcast. And, I had the opportunity and the honor to be a guest on his podcast recently. So definitely go check that out and all the other episodes that he does. He's found a great space in the podcast arena, and talks to some great people as well. And MYB community, we love supporting our fellow podcasters. So do yourself a favor and make sure, look in the show notes. There's the link there. Subscribe to the podcast and make sure to leave Brian a positive note there as well. And then listen to the episodes. Definitely add it to your repertoire. It's going to help you in your real estate business, and that's what it's all about. So, Brian, thank you so much, my friend, for joining here, man.
Ron, a pleasure to be here. That was a tremendous introduction. I appreciate you saying all the kind words about me. I'm looking forward to talking to your audience today, and I got a kick out of your gas comment.
Yeah.
I remember back in '08 when I had before the crash, or when the crash happened, and gas was north of $5. If people don't remember that, it was $5, over $5 a gallon.
Yeah.
And it used to cost me over $100 to fill up my Tahoe that only, got like 8 miles to the gallon.
Yeah.
And I said, all right, I'm going to get a different car now because I'm going to go bankrupt.
Right. Yeah. No, it was funny. My wife was, putting pressure on me to get a bigger truck. Even during those days, I remember, because a few years after that, I bought my Explorer. And my whole thing, Brian, was I was trying to balance, having some space with, gas mileage, because at that time I was in banking and I was driving all over the city, going to see customers. And there was just no way I could have a gas guzzler at those times, because you're right. We were all looking at $4 and $5 a gallon, and it seems like we're back there or close to it now. So we were in that same boat for sure.
Sure. Definitely. Well, hopefully it won't last too long.
Nah, I don't think so. It's like most things. We go through the phase, and then you ride it out as best you can, and then there's a light on the other side, and just hope that light's not a train. But let's get into it, Brian. For those that aren't familiar with yourself, share with us kind of who you are and how you got your start, your origin to get to where you are today.
Yeah, definitely. So as you had mentioned in the introduction, I do have a real estate business. I specialize in creative finance. We can certainly get into that. But prior to that, which hasn't been going on for a long time, I haven't been at this for very long, a few years. I was just pretty much like everybody else. I had a W-2 job. I was in corporate sales for 25 years. Right out of college, I picked up a job with Enterprise Rent-A-Car in the 90s because they had a great management training program, and
That's right.
and that's what I was supposed to do, right? And that led me to a career in sales. I worked for the same company for 17 years, actually selling elevators. So anyone thinking about getting into business, you can see that you can determine that there's nothing to do. Elevators and real estate are not related.
Right.
So you don't need to have all this life experience to do something that you truly have a passion and enjoy and love to do, right?
Great point.
My motivation to leave my job was that I just always knew that there was something better for me.
Yeah.
And it took me a very, very long time to get here. What ultimately pushed me over the edge, Ron, was I have a son. He's 10 years old now, but when I was traveling 100,000 miles a year, I was gone every other week and missing. I'd come back, from a 2 or 3 day trip, and he's bigger, he's talking different, he looks different.
Yeah.
And then when he got to the age where he was able to kind of voice his opinion, he would say to me, "Hey, Dad, I don't like it when you leave. I'm scared to be here with Mom by myself." You can imagine what that does to a man, right?
Absolutely.
So I'm stuck in this situation where I have to provide for my family. I have to earn income. And at the same time, I'm like dying inside because I'm missing my kid and my wife, and I'm missing them grow up. So that ultimately pushed me over the edge, and I got over all my fears. When you talk about getting into business for yourself and wanting to succeed, you have to have what we refer to as a very strong why, a purpose, a reason.
Absolutely.
My wife and my son are that reason, that purpose, and that's what gets me to the desk every day, because being an entrepreneur is not easy.
Not at all.
It's just because you start your own business doesn't mean that all the world's problems are going to be solved. You're going to have to lean on those strong whys, like why you're doing this. And I always think about my son and be like, hey, I'm not ever going back to that situation again. And I was able to start my business, and it's been great. Now I get to see him every day. Offline we were talking about his first baseball tournaments are this weekend, and I don't get to miss any of that. I don't miss any practices. I don't miss any games. It's just a tremendous feeling.
Yeah, that's incredible, Brian. It's just an incredible story, and you think about that why, and for myself, I've been in that same boat, coming through the banking industry, and my audience is very familiar with my transition. I think I talked a little bit about it on your podcast, which we'll get to here in just a little bit. But it was that same thing as my daughters were getting older, and they could do the same thing, voice their opinion. It was putting a lot of pressure on my wife when I'm away to have to get them here, get them there, and that sort of thing. And you're right. You're balancing making a living with your passion, and how your passion is being driven by your why, which is your family. And so I had to make that choice. Actually, that choice got made for me a little bit different. I was laid off, and that's how that choice got made for me. I was kind of tossed in the frying pan. Let me ask you, when you made that transition, did you have to kind of feel that you had to say, hey, I have to have so much money saved up, and I've got to have this in place or that in place? Or was your mindset more, hey, I'm ready to kind of jump out there kind of on faith and kind of, let it fall where it falls?
It was a little bit of both. And this is an important topic to discuss too, because for me, the hardest part of becoming an entrepreneur, whether you're in real estate or you're doing, trading stocks, or, you're whatever you're doing, right?
Yeah.
There's a bunch of ways you can leave your job. I feel like the hardest part is getting to that point where I'm going to do this. I'm starting this.
Yes.
And then the rest is easy as long as you're educated and maybe have some mentors and maybe understand that, you have people helping you. In then leaving the job, right? So now that's, again, I mentioned when I was talking about the fears don't go away. They're just different.
Right.
So I was scared to leave the job for all those reasons, like insurance, security, steady paycheck. And then I started to, a good mentor, coach of mine and friend said, hey, listen, the job is the risk. Like you just said it, Ron, you're expendable. Like you were
Right.
forced into entrepreneurship.
Yeah,
So
exactly.
no one can fire me as an entrepreneur. I'm the boss. So,
Right.
and once I started to change the way that I viewed that situation, the decision to leave became much easier. Now I wasn't, reckless with it. I made sure that we could live for a year with taking no money out of the business.
Yeah.
And that made the decision to leave much easier. And I was able to leave. My transition was about 9 months from when I started doing deals. For some people, it's 12 or 2 years or longer. Whatever it is for you, you just have to make sure that you make an informed decision.
Yeah, no, absolutely. And for me, it was much longer. When I started doing deals in 2007, and I didn't leave the job market until 2018. So I tell people, like, you're talking 11 years of, and I had those same fears. I mean, we had grown our family, and you're looking at getting paid every other week is when you go and you become an entrepreneur, and I remember those first couple Fridays that hit where there's no direct deposit. It's like, man,
Well,
Brian, were you ever tempted to go back into the workforce? I always like to ask that question.
I think it's a tremendous question. And yeah, I've thought about it. I have. When you, again, entrepreneurship is not easy. And
Right.
especially when you're in real estate. I mean, a couple of years ago, I was finding deals left and right.
Yeah.
Now it's a little bit more challenging.
Right.
And sometimes, those old habits and thoughts, they stand up on your shoulder and
Right.
they come in there. But yeah, those are fleeting moments, Ron. And you just have to, if you have a good foundation, I work a lot on my mental game. It's very important.
Yes.
And those go away. But yeah, sure, they creep in there, right? They creep in there.
Yeah, they do. Yeah, they do. And for me, not often, but like you say, they're fleeting thoughts that come into to play, and you have to keep pressing on, and like you mentioned earlier, you surround yourself with the right people, coaches, mentors, other people in the industry, and they can also help, like you say, with that mental piece, because that's the biggest block, I think, for most of us, right, is it's not the skill set or the ability to go and execute. Like you mentioned, even in this environment where it's a little bit tougher to come across deals, there's not as much low hanging fruit. So you have to turn up a few more rocks than maybe in the past in terms of finding deal opportunities. But you're exactly right that mental piece, constantly working on that, is a big part of that transition from workforce to to business ownership. And so, with BKW Property Solutions, what do you do with that? How do you add value to people there?
Yeah, sure. And this really stems from a personal experience that I had as a consumer.
Yeah.
And I had a negative experience on the buy and sell side, actually. When I was younger, I mismanaged my credit because I wasn't educated. Unfortunately, Ron, when Bank of America sends you that credit card when you're 19 years old in college, it doesn't come with a user's manual.
Right.
It just says, call this number, you got $1,200, and have
Right.
at it. And that's exactly what I did.
Absolutely.
And it doesn't say, hey, keep the balance below 30%, make 3 times the monthly payment. Like, nobody tells you that, right? So it got out of hand. I mismanaged it when I was younger, and that followed me around for a bit. So when I got my first home loan, it was difficult. It was literally the microscope situation, and I said, this should be hard to buy a home.
Right.
But I got through it. And I got through it. I learned some valuable lessons. And then on the sell side, I bought a house here in Illinois in 2005, new build. You can't think of a worst possible time to buy a house yet build one. 2005.
Yeah.
I sold that in 2014 and sold it for less than I paid for it.
Oh, wow.
Yeah.
Oh, no.
Right. So, and I lived there for 10 years, paying the mortgage down, and I took a loss on the house. But what ultimately happened is that, we expected to get a certain dollar amount of equity out of the property. Sure. My wife and I, we had purchased a new house, a new build. We were excited. Our family was growing, and I was supposed to get $40,000 after it was all said and done. We walked
Sure.
away with 4,000.
Oh no.
And I looked over at my wife. I said, man, I could have done that. Like I could have
Wow.
done that. I don't need all these people at the closing table to take all my money.
Right.
And I get left over with the scraps, right? So I didn't know
Yeah.
it at the time, but there was another way to sell your house, and it was seller financing and lease options, and we'll get into that. But
Yeah.
that experience is really what ultimately drove me to start this business. And I help people like me in that situation and countless others that have a real estate problem that the traditional market cannot solve. And they're out
Wow.
there every day.
Absolutely. No, I love that, and again, it goes back. It kind of fits, your personality and things like that. Of, being that solutions oriented and tying that with your own experience. And you're right. There are so many people that share that same sentiment and that same story. Whether it's those early years of, I did the same thing at the University of Memphis. They had tables set up for the credit card piece, and they were giving them, we were all suckered into getting the t-shirt and the credit card, and they were giving it out like candy. They gave me a $2,000 limit. I didn't have $2 to my name, and they gave me a $2,000 limit, and the mall was right down the street, right? And the girls were right around the corner at the other dorm, and the mall was down the street. So that those two did me in. And
that 2,000 didn't last very long, I'm assuming.
No, it's funny how that works. That too, especially back then when you had the annual fees on cards and things like that.
Oh, yeah.
What I thought was going to take me a long time to run up really didn't. It took very little time for me to run that up, Brian. So I'm with you there. But no, I love that strategy in your business of helping people, kind of through the real estate pathway and however that takes form for people. And so, you mentioned earlier about, kind of creative financing and seller financing. Mm-hmm. And I've explained this, to this audience. And so there's some familiarity, but, from your standpoint, what is creative financing?
Sure. It's an alternative way to sell your home if conventional doesn't work, or, you can't sell your home for cash. There's so many different ways to sell your home. And that's really one of the reasons I started this business and the podcast, was to educate the consumer on, hey, you don't just have to do it in this little box that you've been programmed to do your whole life, because not everybody can fit in that box. So there's other ways to do it. So taking my situation back from 2014, where I couldn't sell my house, right? Or I couldn't get the price I wanted. I had equity. Look, I didn't need that money right now. I would have waited for the 40,000.
Right.
So in that particular scenario, if that's you and you can wait for your money, you don't need or want all of it right now, but you want to get it and not take the 4,000, you can structure something on what's referred to as a lease option. That's one way to do it, where I would come to the younger Brian, the Brian from 2014, and say, hey, look, I'll give you the 40 grand. And I'll structure a term with you. Let's just say, for argument's sake, it's 5 years. So on or before 60 months, I'm going to give you $40,000, and I'm going to pay whatever loan balance you have off at that time.
Yeah.
In the meantime, you go on, you live in your new house, Brian. You enjoy your family. You move on. Forget about this house. I'm going to pay the mortgage. If anything pops up with repairs or maintenance, I cover it. You're just waiting for the 40,000.
Right.
I would have absolutely done that with someone who is, credible.
Of course.
If that situation came to me, I just didn't know it existed at the time. I was just like, I got to keep lowering the price because I can't afford 2 mortgage payments.
Right. Mm.
So that was my pain, and I would have done it. Now, most people are not going to do that. They're going to do the conventional method. But what about the people like me, or someone who has little to no equity in their house? They're behind on their payments. They have a serious situation. Look, we talked a little bit about the market earlier. Yeah. And I'll just say this about the market. Just turn the TV off, right? If you're a real estate investor, and go talk to sellers, because in any market,
right,
there are people who are going through pain, death, divorce, downsizing, job loss, job transfer. I could name 100 different scenarios.
Yeah, absolutely.
Got to go find those people. They don't talk about that on the news. They talk about houses selling in 5 minutes, $50,000 over asking. That sells.
Right. That headline say that
Yeah,
sells newspapers and website clicks. That's
sure.
that's for sure.
My story doesn't sell. I mean, it's like nobody cares about that guy.
Yeah. Brian O'Neill is our guest today. Here on episode 289 of the podcast. That's good. No, but it's true. It's true. I'm laughing because it's true. Those stories don't get told in the marketplace. And so, what are some of the myths or pushbacks around creative financing, Brian? Because some people listening to this, and I'm in the space as well, and I've run into the whole gambit of either pushback or blowback. So what's some of the pushback that you try to educate people on, whether it's myths or misconceptions? Because I think there's a lot of those out there when people think about or they hear creative financing.
Yep, hear the creative financing, maybe they hear the term rent to own, and it's just got a bad rap, right? And there's people, look,
Right.
this in all walks of life, there's people doing stuff they shouldn't be doing. So
Absolutely. Yeah.
Sure, there are some misconceptions, and if you're a seller, yeah, I'll just say this about seller financing: if you own your house free and clear, no debt, okay, how do you think you're going to get more money selling it today conventionally, or if you finance somebody at 4% over 30 years, amortized with 10, 15, 20% down?
Yeah, the latter all day long.
100%.
Yeah.
The banks have branches all over the place for a reason. Okay?
Right. Exactly.
So, if you look at your truth in lending statement, so when you go buy a house and people don't look at this, but it's like, what does this loan cost you? On a $600,000 house, you're going to pay over $1 million for it over
Right.
30 years. So as a seller, if you could put your mind into, okay, I'm going to turn into the bank, you're going to get way more money for your house. Now, is everyone going to do that? No, they're going to take the lump sum because they live in a now moment. They're not forward thinking. And there is risk associated with that. But, if you're going to rent your house for 15, 20 years,
Yeah.
why wouldn't you do a seller financing situation where you don't have to do you go from being a landlord to the bank. You're elevating landlord to the bank.
Right.
Again,
Which is
the
a big
banks have
difference.
branches all over the place.
Yeah, it's a big difference. And you notice the bank's not in the business of being the landlord. They're in the business of being the bank, right? And so that's a much stronger position, right, than being responsible for everything as the landlord, having the stresses of tenant management, property management, everything that goes along with it. And so with creative financing, you're allowing that person from, maybe a somewhat impactful distress situation to get past that. And I want to say there's a statistic, Brian, and I may be incorrect in saying this, but there's something like 75 going on 80% of the population that doesn't fit that conventional method, right? So we talked earlier about the story not being told, but there's actually a very huge population that is impacted by the things you mentioned. They're not in position to make repairs. They're going through some sort of divorce or cut in hours or loss of job or something that's impacted health wise. I've come across a lot of people that are looking to get closer to family or to grandchildren. And so that level, that situation creates an interest in looking at things more creatively and more holistically than simply, the traditional way of waiting on a real estate agent and waiting on the bank and that sort of thing. Now, are you seeing that as well?
Absolutely. The statistic you were looking for is that, and depending on what market you're in, it's roughly 65 to 80% of people can't qualify for a loan today.
Yeah, exactly.
If you talk to any mortgage lender, it's, 2 out of 10 get
Yeah.
approved. 2 out of
Right.
10 applications get approved. You can tell me if I'm wrong, please.
Yeah.
But that's what I hear.
Yeah,
And
absolutely.
which makes it difficult to sell. Again, the buyer pool is small of those who can qualify.
Right.
And then interest rates go up, and that all of a sudden a $300,000 loan just went up $180 a month because you went up 1% interest rate.
Right.
So affordability is an issue. And then again, you have all those scenarios that you just mentioned where people are hurt by their jobs, or they had to relocate, or they want to move closer to family. So there's so many reasons. I always say this about creative financing. Because a lot of people will say to me, why would somebody do that? I'm
Yeah.
like, well,
Right.
you may not want to do that, and I get it, but I can there's more reasons why they would do it versus why they wouldn't do it.
Yeah, exactly. That's extremely true. It's very true. And I found that when you're able to educate people on one of the challenges when particularly when new people get into wanting to position themselves in creative financing is they don't do a really good job explaining and tying in the pain point to the benefit. And so they just ramble off the features of creative financing as opposed to what you just did, which is tie the pain point to the benefit. Right. And then the transparency of, listen, it may not be for you and your situation if you are one of those people that, qualify conventionally. But like you just mentioned, and I can confirm that as a longtime banker, that the approval rate, and you think about doing a mortgage today, it's not just getting the initial approval, but then it's that time in which they can come back and say no at any point after that. If there's any issues with the particular property you select, if you happen to get an inquiry that shows up on your credit, we talked about credit earlier. I mean, I've seen people like right before they go to the closing table, have the bank come back and say, we're gonna have to increase, we're gonna have to add, a point to your rate because we saw an inquiry that popped up and you may not even known or even initiated it. Right. So there's so many different ways they go and check your employment. And then the employer says, we cut hours by 5 hours last week. And then also the mortgage company says, we can't do it or we can't do 300,000. Now we got to do 250,000. There's all kinds of things, right, Brian, that can come up in that process. And that's why but you and I echo that same sentiment that, if you're listening to this, be open to hearing out, the options with creative financing. Many people will be surprised that many, whether it's celebrities, whether it's your politicians, they're using creative financing all the time. All the time. The people that whether it's the Gary Vaynerchuks or the Grant Cardones, these folks are using creative financing all the time. The people that we all hold high regard in business and financing, that's how they do it, right? They operate creatively and they mitigate their risk where they need to, but they work with credible people like yourself, Brian, and they put themselves in great positions, and we can all be doing that.
100%. That's a great point that you bring up. And I think one of the other points to highlight about a seller, especially if you have equity. So there's another statistic I'll throw at you. It's roughly a third of all homes in the United States are owned with no debt, free and clear. A third. Yeah. And there's 40 something million houses in the United States.
Oh yeah.
So I would ask any seller, like, what are you going to, if you have a $400,000 house, what are you going to do with $400,000?
Right.
I mean, seriously, have you thought about what you're going to do with that? Like, again, we're all programmed to think, well, I'm just going to stick a sign in the yard, sell it, I'll pay my realtor fee, whatever that is, and closing costs. I'm going to take this $370,000 and I'm going to move on. Well, what are you going to do with it?
Right.
Doesn't it make more sense to consider to keep the asset, which is real estate, which historically over time does nothing but go up? Sure, are there dips? Yes.
Yeah.
They're not making any more land.
Right. Exactly.
Right. So, I mean, it's just something to think about and consider. What are you going to do with this lump sum? And what happens to most people that get a bunch of money that have never had it before?
Yeah, they a couple things happen. One, they spend it. Right. It ends up getting spent on sometimes frivolous things or things that depreciate. Mm-hmm. Number two, the IRS shows up and says, hey, buddy, you got this extra $370,000 that we're tracking as income to you. Now let's have a little bit different conversation than we've had in the past. And in most cases, that's a conversation that people don't like. When the IRS wants to have a conversation with you, I can almost guarantee you won't like the outcome.
No. Yeah, you're right. I'm glad you brought that up. So it can be bad when you have a lump sum that you've never been able to manage before. You look at all these, these young athletes that become millionaires overnight, and it's just unfortunate. I mean, the leagues are doing a lot better job, but again, if you didn't have money and all of a sudden you have a bunch of it, you need to know what to be able to do with that.
Yeah, Yep, absolutely. No, very true. So, no, thank you for that on the creative financing side, Brian. Let's talk about the podcast because you've mentioned that and I've mentioned that. What inspired you to do the podcast? Because I remember kind of when you were first, kind of starting out and you were putting it together. You were really, you were documenting that process. And I always thought, like I think most business owners are, I think you were a tremendous fit for the space. Because I think you have an approach that's different than I hear in the real estate space, in all honesty. And I've shared that with other people that, again, I shared at the beginning of the show and maybe a little bit offline. Sometimes our space can be, somewhat aligned with the used car sales space, not to make that derogatory, but you get a lot of glitz and glamour and, this can work and it's so easy. And, you only need $2 and you go make 100,000 and, and you kind of take a more practical kind of balanced approach, I think, in the podcast where you're just sharing you're dispelling myths and just sharing practical solutions to identifiable issues. And I think that's a nice space to be in. So talk to us a little bit about the podcast.
Yeah, thank you, Ron. So the podcast is a better way with real estate, We have a YouTube channel as well where it's really all about education. So what I found was when I started talking to people, right? When I started talking to sellers and I started working with my buyers who are just outside of financeability, and I started hearing their stories. Like I thought my story was bad. Like, oh, poor Brian lost $36,000, right?
Yeah.
Now, when I started talking to sellers who were in dire straits, right? Or buyers who their parents opened up credit cards in their name when they were younger and they couldn't qualify. They couldn't even get a bank account, let alone a loan. Or, they had identity theft happen to them multiple times. It's like, how are they? But again, they're doing all the right things. They have good employment. They're paying their bills. They're managing the situation. I started hearing those stories and I'm like, why can't they get a loan? It's like, this is just unfair.
Exactly.
So I started the podcast to educate because I wanted people to understand that there are other alternatives. Like if you can't sell your house, there's other alternatives. If you can't buy a house, there's other alternatives. And that's really how that was born, was because I had a personal experience with it. But then I started hearing all these other stories on a daily basis. And I'm like, number one, I have the ability to help people and I want to. So I just felt pulled into that. I just felt pulled into that I had to let these stories be told. And I do tell them on the show.
Yeah, absolutely. What's the best way for everyone to find the podcast? Now, obviously, MYB, if you look in the show notes, you can see the link and that sort of thing. But, what's the best way and how often do you present kind of new episodes?
Yeah, we do weekly episodes, and you were one of the first episodes, which I'm super grateful for. And it was just an awesome episode. And if you go to my website, bkwpropertysolutions.com, there's a podcast button at the top. You can listen to all the episodes, but we're on, Spotify and, Apple Podcasts. We're out there everywhere. So give it a listen. It's, you might learn a thing or two. And that's the idea of the show, is to educate people on all of your options. I mean, I bring real estate agents on the show too, just to talk about like, what should you do when you're buying a home? What should you do when you're selling a home? Because that's the conventional way. That's still the way people sell their houses and buy them.
Yeah, absolutely. And that's a good point. I'm glad you brought that up, because sometimes when we talk creatively, it can come off as we're being, maybe negative towards that conventional way. And that's not what we're doing at all. So just to kind of dispel that, when we share things creatively, we're sharing a viable alternative, right? And so what we look to do, and when you talk about providing solutions, is don't get pigeonholed into any single one, because if you're not a fit, just have an awareness and understanding that there are other solutions that can be a better fit. Just like any other area of business, there's not, in most cases, there's not just one kind of size fits all. In real estate especially, there's several other very viable, very legitimate ways that you can solve problems. And so you want to keep that in mind. That's a good point.
Thank you, 100%. And I always give my sellers and buyers, like if I'm talking to a seller and they're not a fit for creative financing, hey, I know somebody who can pay cash for your house. I know a realtor. I still want to help them. It's like I'm not going to try to, again, not to insult salesmen, car salesmen. I was a salesman for a long
Right.
time.
Yeah.
I'm not
Me
going
as
to try
well.
to convince you to do something that doesn't work for you. It doesn't make any sense for me, and you're just wasting people's time. So just try to help them. And believe me, you know how this works. The universe brings all that stuff back to you.
That's without a doubt, Brian. Without a
Yep.
doubt.
So
Very
give.
factual. Yeah. There you go. Yeah. I've always found I've never lost when I gave. And when I look to to be my best for people, I always found that reciprocated. I mean, even through challenge times and things like that. There's many times where I've gone through lulls or things like that, and I'll get a call from a seller or get a call from a cash buyer or something like that. That just, hey, I'm right back in the game just like that. And I like to think that, a lot of that is tied to what you just mentioned, Brian, is just looking out for people's best interests, being transparent and true with them, and, directing them to the best resources that you can.
Absolutely.
You talked a little bit about family. As we start getting towards a close, Brian, just wanted to, get your thoughts on, just the importance of family. And, for many of us that are listening, we all have family that, is in various forms and structures and things like that. But just talk about what family means for you and, and again, how it motivates, you and your business now and into the future.
Family is everything to me. Relationships are difficult, especially your family relationships too, because the people
Sure.
closest to you typically have the most difficult relationships with. But um, I'm I'm super grateful on a daily basis for my family. I
Yeah.
mean, and I may be getting off track here, but
No.
one of the biggest lessons I've learned in my life is gratitude and being
Mm.
grateful for what you have right now.
Yes.
Okay. And the reason for that is if you are waiting for something to happen, like my life will be better if, or this situation would be better if. Now, if you're not happy right now, if you don't find a way to be grateful for what you have right now, even if you have anything, hey, I woke up this morning. I'm happy about that. I get to put my 2 feet on the ground. I got my wife. I got my son. I got a roof over my head. I mean, there's a lot. You can spin a lot of negative stuff into gratitude, right? So
Right.
I practice. I'm grateful for my family every single day. I work on those relationships. I work on 3 relationships more than anything. The one I have with myself, the one I have with my wife, and the one I have with my son. And the relationships with my wife and my son didn't get better until I worked on me,
Mm.
on Brian.
Yes.
Which is I always would say, look, you have to look inward before anything outside of your world
Right.
is gonna change. And that was the game changer for me. Was I had to look at Brian first.
Yes.
But to your question, I went off track there. Sorry, Ron. I
No,
mean,
no, it's good. That's good.
family is everything to me, and it's really what gets me going and driving. And life doesn't last forever, and I don't want to miss anything. And I would just say anyone who's thinking about, like, hey, I'll do this when, like, you're gonna blink and your kid's gonna be they're gonna be grown up,
Yeah.
and you're gonna be filled up with regret.
Yeah.
Don't do that.
I've told this story before on another episode, but I remember being in banking around the time when my wife was pregnant with our oldest daughter, who's 12 now, Brian. And this lady, we had a customer that came to our branch. I was a branch manager at this time, managing a fairly large branch. And the lady came up. She had to be in her mid-90s. And she still was able to drive and kind of get around. And she came in and we were doing some work on her accounts, and she was very excited because she was in town to visit her son, who he was in his mid 70s and having some health issues and things like that. So she was there to see him. And of course, I'm excited. I'm about to be a parent for the first time, and she was excited with me. And she said, Mr. Brooks, I don't remember what my son and I had to eat. She had seen him, several weeks, before that. And I don't remember what we ate, but I remember the day he was born. And there, he was born over. She was in Germany. Her folks had been part of the whole kind of concentration camp. Unfortunate incident that took place there, and so a very strong lady. She had been through a lot in her life, and she told me something. She said, the biggest thing you can do for your daughter, for your wife, is always be present and be engaged, and cherish every moment, and be grateful for those moments. She's like, my son, again, he's in his mid-70s, right? And she talked about him like he was a little boy. I mean, she remembered all those, him coming up, and him playing out in the yard, and the time he fell off his bike, and I mean, she just, she remembers all these things into his adulthood, and she said, just be present, for all of that. And so when you mentioned that about being, having that gratitude. Now, I've heard the quote, Brian, that comparison's the robber of joy, right? I don't know who said that, but, so it's easy to get into this life of comparing. And you and I being in real estate, it's easy to compare your business to someone else's real estate business, and how many deals they're doing, and how they're doing them, and how much money they're making. And it's easy to compare situations, like you said, what if I was able to do this like this person, or do that? And you're exactly right. Having that gratitude really helps with the perspective, and she instilled that in me in a short period of time. That is like, hey, be present for all of that. And so I take that very seriously with my daughters as they're in different activities. We just got back from Disney a couple weeks ago for a band trip.
Nice.
And it was just great to just be a part of that, and give her the space to be around her friends. Of course, at 12 years old, she doesn't want dad hanging around anymore like she used to. I was kind of the walking ATM there.
Of course, you do that job well, I'm sure.
Yeah. Oh yeah. I did it well there too, definitely, for sure. But I was more than elated to be able to do that, and it just made me think, Brian, as I walk around there, it's like, God, I was once the kid, and God, it only takes a few years, and then now you're the adult, it's just, it was wild.
Yeah.
But that's my role, and I embrace it, and I just love what you said about gratitude, and that story came to mind. So
that's all. I love to share. And wisdom. You learn a lot from a 90-year-old woman, or a man for that matter. So you listen to them, and I think the lesson here is that if you think about your life, like think about the best moments in your life. If you have kids, right? Think about the best moments in your life. Day my kid was born, day I got married. I mean, it all relates around that type of stuff. It's not when, I did this awesome real estate deal. Like, sure, that's an accomplishment, but like the moments in your life that, catch you, like, right, that you might get emotional. Like, those are I will never forget the day my son was born. I know what I was doing. I know what I said. I know where I was. I mean, and that was 10 years ago.
Yeah, absolutely. Yeah, I'm the exact same way. I echo that, Brian. Brian, I can't thank you enough for taking time out of your day to join us and just share such great insight and perspective with us. I think this helps us all. This always helps me to have these conversations, and and to connect. And so I thank you so much for this.
Yeah, pleasure to be on. You're a tremendous individual, and you're adding so much value to the world. And I'm so honored to be on today and just share a little bit of time with you and your audience. Thanks again.
Yep, absolutely. So MYB, make sure you go to BKWPropertySolutions.com. That's where you need to go, BKWPropertySolutions.com. It's in the show notes. That's where you can learn more about Brian and his company. And if you find that he can be a resource, definitely reach out and let him know that you heard him right here on the Minding Your Business podcast, as well as connect with his podcast. The link there is in the show notes as well. A Better Way to Real Estate with our guest today, Mr. Brian O'Neill. Brian, thank you so much, man. Again, I blessings to you and your family. Look forward to remaining connected, and your son being in baseball. Look to see his career continue to blossom. That's always awesome, man. as a person that loves sports and played a lot of sports, I love to see that, and your involvement and connection with him. I'm sure he'll always greatly appreciate that, and he'll always have those fond memories. So that's awesome.
Thank you very much, my friend. I appreciate it.
All right. All right. MYB, this has been episode number 289 of the Minding Your Business podcast. Please share this podcast, share this episode, share other episodes, and we want to continue to grow the listener base here. Follow me on various social media channels. Follow Brian on the various social media channels here in the show notes. And again, if we can be resources to you, definitely connect with us. 3 areas that unite us all, no matter where we're from, no matter what side of the water you come from, what side of the tracks, how you look in the mirror. 3 things that unite us all. We all want to be a little bit better for ourselves, a little bit better for our families, and a little bit better for our communities. And if we keep those things in mind with every person that we interact with, even in all the noise of everything that's going on in this world, sometimes we lose sight of that, we all are looking to get to that same place with those 3 areas. So keep those things in mind. And I believe if we do that, we can all collectively make this place just a little bit better. Champ Ron, the Minding Your Business podcast.